Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you when you may not need to wait for a retest before you enter a trade. Basically I used to wait for a breakout, a retest after a breakout, a proper retest before I find an entry. But there are instances, because people have been asking me questions like, must we always wait for retest? You know, there are times you may not need to wait for a retest, but there are some things you need to observe. There are things you must see on the chart first before you decide not to wait for a retest. Then you go into trade. You understand? If you cannot find these things, then do not try to enter a trade without a proper retest. One of the things is this. In fact, the major thing is where the next point where the market will possibly have to pull back will come, because right now, let's say in this boom 500, you can see I'm on boom 500 right now on the 15 minutes time frame, and this is my trend line that is guiding the movement, this bullish movement. Then let's say the market broke out of this trend line. Now, when the market broke out of this trend line, there is supposed to be a retest before I would want to find an entry. But why would if I would want to enter the trade before it, pulls back or retraces to retest properly? I have to look out for something, because there are things you have to see. For example, you can see this particular point here. Look out for the next swing low. Look out for the next swing low in the market, where you expect, that's where you expect the market to spike again, which is this point. So if you notice that we have clean candlesticks right here, this is where we have the breakout, and before the market can get to this particular spot, is a whole lot of time. It takes about a bit an hour. I think it should be like an hour 30 minutes or so, considering the number of candlesticks we have from here. So you can enter and sell trade at immediately this bearish candlestick closes below this trend line. Then you target somewhere around here. Like now, this is what I mean. Let me try to zoom in a little. After the close of this bearish candle, one moment. All right, so after the close of this bearish candlestick right here, you can enter a trade and target this particular region. So even if you enter a trade with a loss of 2.0, let's say you enter a trade with a loss of maybe 2.0 on this boom 500, and you target just here, guys, you will scalp and make about $70. About $70 before the market starts to spike, because this is where we expect the spike to start coming up. In fact, this is where I would expect the market to start retracing to go back and make a proper retest. So if you can always enter the market at this point before it goes back to do a retest, then you can make some profit, but you have to be careful. You have to be careful to ensure that the distance between where you expect the market to start reversing is a little far from where the market is actually breaking out. But if the distance is too close, somewhere around like this, guys, you need to be careful. Do not enter the trade. Just wait for it to come back and retest and give you a confirmation to go in. That's one important thing I said I would want to share with you guys. Since you have decided to stick to this channel to help it grow, then I have to be pointing out these things to you, because these are very little important things you need to understand. If you do not know this thing, you can easily say, because there are so many traders who do not wait for breakout and for a retest. They won't tell you this thing I'm telling you. They'll just tell you, once you see the candlestick close below it, once there's a breakout and a bearish candlestick closes below it, you enter a sell trade. So if you, maybe after getting that information, you enter a sell trade here and it takes up to this point, you will make some good money and you step out of the market. You won't have any idea that why that worked was because this low was around here. You understand? So if you did this and it works without having the knowledge of which I've just told you now, the next day you will see another opportunity immediately after a breakout, and you won't even notice there is a higher low somewhere here. There was a higher low somewhere here. You see the breakout happens and you enter the sell trade on the close of the bearish candlestick below the trend line. Then you enter a sell trade expecting to scalp the market for a long time, or maybe even for 30 minutes. You see immediately it started moving a little, you see a massive spike to the upside and you are in losses. So guys, that is what you need to take note of. You have to take note of this. It's very important. It's very important. Always take note that the market will always want to spike where there was a previous spike in activity. Like here you can see, even if it did not spike much, but it reacted to this particular level here. There was a reaction here. On coming back to this particular level here, there was another reaction here. So why I'm saying, I even took a trade today. Today is Saturday. I took a trade here today. Let me just show you guys what I did. I'm telling you what, because I applied this and it worked, and I've been doing a little research considering concerning this particular this thing I'm telling you. I saw the market somewhere here. The market went up, came down, and broke below this line, this key level right here. Market went below this key level and closed bullish. Usually I'll wait for a proper retest before I want to sell the market, but when I looked at where the market was going to start coming back to retest, I noticed it was very far from this key level. I expected the market to start spiking along this around this particular point here, so I decided to enter a sell trade at this point with a lot of 2.0, and it gave me about $55 per position. I opened about 3 positions and it gave me about $55 per position. So you can see that the market, and after now the market has closed around. You see what it did around this point where market has been buying previously. It tried to buy and then still came down and has closed below this point. So the market is still selling. There's a little spike here and is trying to sell back down. So if you can always know and look out for the distance between where the breakout is happening and where the next possible spike will be coming out, then you can be scalping. This can also be applicable to catching spikes. You can apply this to catching spikes too, guys. You can apply this to catching spikes. It works a whole lot of times. So this does not actually. So if you want to trade based on the main strategy, which has to do with them, you want to see the market breaking out of a like breaking out of a trend line, then going below a previous higher low, and then you want to see the market and doing what, coming back to retest where it had sold previously. That will still work. But if you want to be aggressive, you will just do what I've just shown you now. If you want to be aggressive, enter the market aggressively without waiting. You can enter the market on the close of a candlestick below the trend line, when you notice that where it is going to spike is a little far from there. Then you can just back some profit and step out of the market. You can step out of the market. So but for based on our main strategy now, if where is our major where is our swing high, this is a high, this is a low, this is a swing high here, this is a swing. I think that place is a higher high. Yes, it's a higher high. It's higher than the previous high. This is a higher high, this is a higher low, and this is a higher high here, and this is a higher low. This is a higher high here, and this is a higher low before it produced this one. So this is the current higher. I need to use a horizontal line. I need to use good. This is the current. This is the current higher low at this point, where we have the change of character. That's the actual place we're having the change of character, and the market decided to go back, though it did not get there directly. You can see it started selling to the downside. You can see, but take note, it must not just be a line. Like I used to tell you, all these things are zones. So had it been maybe you placed a rectangle, then you see that in most let me see if I can use a rectangle, it will have captured this zone. Let me see if there is a possibility. Well, it did not. And let me tell you also, if there is any chance, if by chance you can't find a good entry point, the market does not come to where you want it to get to, do not force it to get there. You can skip that particular trade and wait for another one. Until you enter a trade, make sure you have the reasons to enter. Don't say because we say the market has to break out, come back, or the market has to break out and go below a previous swing high, higher low, then after going below it has to come back. Remember, it has to come to somewhere. The market has to get to where you are confident it's going to sell before you want to go into sell. If based on your analysis you are not too sure where the market has gotten to and is trying to reverse, you can just keep that particular trade. You must not trade everything you see all the time. You can just keep it until you find a trade that you can enter, that you can go in with the full confidence. Then you can trade. Else, skip the trade. Like now the market is selling. There is a chance that the market might be selling down till this level here, because this is the next swing, this is the next point it might be buying from. It might get up to this particular level, so it might be selling up to that level, and you see that it's massive money to be made in the market, guys. So if you can also practice this, add it to the strategy you have already, it will help you make some good money in the market regularly. Like now, if you can come, let's go to crash 1000. Let me show you that our strategy is powerful, guys. Our strategy is powerful. Look at it here. I cut this, and you see the market that was bearish, it broke above it, and after changing, I think I explained this one yesterday. I explained this yesterday on my the video I posted on this channel. You can see the massive spikes. It bought from here up to this level, then see the spikes to the downside. Now, after spiking to the downside, the market also, now this time around, you see it went above the previous swing high. This is the higher low, lower high, because it was giving us, looking at the market structure, this is a high, a low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and this is the lower low. No, okay, yes, lower high here, and this is the lower low here. So this is the recent lower high in the market. So what happened in the market? You see there was a breakout. Market broke out of this trend line, went above and got to this level where it had been selling previously. You can see it spiked massively to the downside. It spiked massively to the downside. So like I told you, if there is a way you can just instead of waiting for the pullback to come back to this zone before you start selling, or you start you go into the trade. If you look at where the market has been selling previously, and you expect the market to actually sell from there, then, and you see it's far from where the breakout is happening, then you can enter the trade and target somewhere close to that place, and you make some massive money before the market will even start spiking to come down here. Guys, there's a chance you can be catching every move in the market. If you want to be serious with these studies, take this thing as a business. If you see it as a business, you will be able to, in fact, you can be catching all the moves in the market. Yes. So let's say after a breakout on this, maybe you enter the trade at around this point with 2.0, you can see, and you take profit is somewhere here. That's about $62, guys. $62 on losses of 6.2 2.0. Then let's say you enter the trade here to catch the spike down to this point again, you'll be making another $70 or so. Then now you come to enter where, mind you, this is where the market is actually reversing, like we used to explain. After going above the previous swing, higher low or lower high, it goes up, then comes back to a key level. It came back to this particular key level here. There's a key level here. If you zoom out, you see the key level right here, because market also bought from this point. Market bought here and sold here. Now it has come back to buy. The market also bought from here. Let me see if I can zoom a little. Okay, let me see. So you can see market sold here, bought here, and bought here also. So that's the key level. Market came back to this key level, and there was a confirmation before it started buying. You can see this weather hammer, they call it, this particular candlestick pattern here. After this candlestick pattern, you had this bullish engulfing candlestick pattern right here. See the market buying to the upside, went above this high, and buying massively to the upside. So these things are very simple, guys. They are very simple. All you need to be targeting, once there is a breakout, wait for the market. Just look at where you expect the market to start buying again. Like if the market is actually selling, if the market is actually selling, like the market was bearish, then it broke out of a trend line. Look out for the nearest resistance zone, the market. If the resistance point is a little far from where the breakout is happening, you can enter a buy trade. Buy till it gets to, once it approaches that resistance zone, you close the trade, and then expect some sales to the downside first. The sell has to come back to retest where there was a previous, where there was a key level. Once it comes to the key level, then you can continue buying to the upside, guys. So this strategy really works. It works on all pairs. After our training yesterday with those that are enrolling in the 2 weeks mentorship program, I asked them to look out for crash 300. And what did we have on crash 300? Let me see if I can get there quickly. Let me change this time frame to MT5 is misbehaving. All right, so when we finished the class, the market was somewhere around this point. The market was somewhere around this point, and I told them to take note of that and even posted in the group and asked them to monitor this particular market so they can. I want to see if they were able to understand the what I've taught them. So now you see it played out, guys. It played out. You can see the movement in the market. You can see the breakout. There was a breakout at this point, and market came back. This was the previous swing low in the market. This was a previous lower high, higher low in the market. So there was a change of character when this massive spike happened. There was a change of character when this spike happened. Then the market came back and retested this zone. You can see the massive sells to the downside, spikes, guys. You can see the spikes to the downside. So this strategy works very well. This strategy works very well, guys. All you need to do is just to be careful, just be careful. Like here, you can see that where the market would come to retest after breaking out and changing, breaking out and changing character is somewhere here. So if you can wait for the market, immediately it closed, then you enter a trade, just target this point and take your profit and leave the market. Else, do not even try. Or you can just wait for the market to retrace if you're not sure of what you're doing. Mind you, these things require practice. All these things I'm telling you is not as if once you start practicing them, you just succeed. It requires a bit of time. You need to put in some time, study them, guys. Study them. There is more to this than you just watch a single video and think you're okay with it, guys. So I want you to try to practice these things I'm showing you, and try to apply them on your demo account. Trade on your demo account first. I continue to advise you, if you know that you cannot fund the account up to $500, guys, try to, and you know that you can only fund your account with maybe $100 or $50. Try as much as you can to blow your demo account to that $50 and try to trade with it. See if you can build it up. See if you can build it. Try to make sure that you don't blow that account so that it can help you when you want to trade on your real account. It will also help you to to grow your small account, because if you keep on trading on this demo account, your demo account, and you're using big lot sizes, guys, there's a very high chance that when you want to start, you'll be making big profits when the trade goes in your way. But when you start using your real account and the little money you're able to deposit on your account, you'll be looking for ways to make big profits too. So in that case, you might start trying to use a higher lot size, a lot size that is too far, that is not appropriate for your small account. And the next thing, the market just tries to go against you, a little movement against you, you'll be losing so much. So if you can manage you can manage a small account on a small demo account, there's a very high chance you can also try to manage your real account, guys. So blow it up, leave it with $50 and try to grow from there. It takes a bit of time, and I promise you, once you master these things I'm showing you, you'll be making money every week. You'll be withdrawing from the reef every week. Else just go and depend on signals. If you don't want to study it, just go and wait for people's signals. But if you want to study it, I promise you, you'll be successful. And mind you, if you've not joined our Telegram channel, there's a link in the description of this video. I'm hoping to hold a free training very soon. That can come up between Tuesday and Wednesday. There's a poll on the Telegram channel for you guys to vote. The highest number of votes, the day that has the highest number of votes is when we are going to have the training, and the poll will be closing on Sunday. Yes, tomorrow on Sunday. And also I'm going to add the time, because I want to make sure I will look for it. I'm trying to get a time that will favor at least majority of the people, because there's no way it can favor everybody, but at least majority of people have to be online, because I'm going to give you values. We are going to talk one-on-one, and you can ask, we are going to interact, guys. So if you don't want to miss that, click the link in the description of this video and join the Telegram channel. And also, if you're interested in my one-on-one mentorship, guys, you will find my direct contact on that same Telegram channel. So you contact me and we discuss your mentorship training. And also, guys, please do not always forget this. Like this video. try to like this video. Each time you watch, just like this video and encourage me, so that YouTube can also share this video to other people that are looking for this kind of important information, guys. Subscribe to this channel if you've not done that yet. Share your thoughts in the comment section. Encourage me so that I can give you more, guys. So till my next video, stay blessed. Peace out.